Good afternoon. In this video, we're going to do a 2-week recap. Before I get into the recaps, if you're not in the room, you can find the link in the description of the video and in my bio section of social media accounts. Also, please like the video, subscribe to the channel. Well, first of all, I'm having trouble speaking today, so been overtired for the last few days, but now I've caught up with some sleep. I'm just a little disoriented. It's been a very crazy week. If you don't know, my wife gave birth to our son, so been kind of busy with that. So that's why I didn't trade that much this past week. But now that he's here and he's home, everything should be back to normal. I took a couple half-day trades, went past Thursday and Friday. So like I said, this is a 2-week recap. Last week I did 12 wins, 2 losses for a win rate of 85.71%. Not too bad. Just that one day, Tuesday, I just struggled with. Other than that, had a pretty good week. Can't complain whatsoever. The week before, which was the week of September 16th, I did 16 wins and 2 losses for a win rate of 88.89%. Very good week. Can't complain there either. It was kind of a tricky week though. I remember when I posted the weekly recap summary on Twitter that that was the week that VIX was at lower day. Not lower day, but at yearly lows, and the put to call ratio was very, very high, and that was very, very confusing. I don't think I've ever seen that. Usually when put to call ratio is very, very high, VIX is already popped. VIX is above 20 or above 18, and everyone's on the put side because everybody's been on the short side for a while, and put to call ratio just gets high and VIX is already elevated, but VIX was at yearly lows and everybody was on the put side. I think people were just prematurely anticipating a drop, and everybody just jumped on one side prematurely. And I don't know, I've never seen this before, so but I haven't been trading that long either, past 10 plus years. I think close to 10, 5 to 10 years. I've had the room for at least 3 or 4, so yeah, well, maybe if I had to guess, 8 to 10 years I've been doing this, so I haven't seen this before. So time just goes by so fast. It feels like I just started trading just a couple of years ago, and I just opened the room fairly recently, but no, time's been going by really, really fast. But anyways, yeah, I haven't seen that before. So we will go back to, let's see, the 16th was the end of the week. The 10th? The 11th. Okay, September 11th. Okay, trade ideas room. I now I gotta remember to go back all the way to the 11th, which is right here. Okay, hourly. I'll end up probably putting VIX up eventually. You know what? I'll probably just put VIX up now. I hope that everything's recording right, or I've just been talking to myself for no reason. Okay, everything's fine. The way my morning's been, I'm kind of spaced out right now, so yeah, we can see VIX was down here, but okay. September 11th, traded his room. SPY puts under 447. This is, yeah, because you can see we were trading at 447 right here on Friday, and just ran up. And the fact that it just was running up on September 11th, we had a pretty good run because it closed at 445.50ish, and it's up here right around 448. So it's had almost a $3 gap up. And SPY hasn't had many of these kind of gap ups lately. The gap ups have been pretty minimal. So I was thinking that because we had this run up into September 11th, that we're probably everyone's gonna jump into calls that open, and we're gonna end up dropping. So anytime you have a big gap up, like if it's gapping up $3 to $5 up, I'm looking at the short side, if it's gapping up, because everyone's going to run and jump in on calls, and the market makers love to gap things up and get it to pop a little bit at open to get all the people in calls, get them trapped, and they flush on them. And it works vice versa. Well, if it's gapping down $3 to $5 or more, that everybody will go and run in and jump in puts at open, then they'll pop it on them and take everybody out. And people just leave scratching their head wondering, okay, we gapped this so much, why didn't we gap and go? Well, the markets, I mean, low floats do that, but the market SPY does not do that too often, and the market makers love to use those scenarios to take people out, because the name of the game is to take out retail and take your money. The market's not there to make you money, even though people, show that they make a lot of money. Yeah, but the market is there to take people's money. That's why 90% of the people fail. They have the follow the herd mentality, follow the flow mentality. And if you want to do well trading and in the market, you got to think against the grain. You got to think ahead. You got to think like a market maker. You got to think like an algo. You got to kind of see things for what they are, because otherwise you're just going to get your butt handed to you. So 411, the 447 level was this low right here. I just kind of rounded down. I like the whole round numbers. I don't like saying, okay, 447.25. I mean, I do during the day, because during the day the exact number is more important. But at pre-market, at open, there's so much volatility that if it's gonna break, it's gonna break it. It's gonna break with authority sometimes. So that's why I always round down to the nearest half dollar or whole dollar. Plus, it's easy to remember. So first candle was red, big red candle right there. So I took puts at the new lower day on the second candle, which is right here, 447.80. I took the 44.75 puts at 580. They dumped, and they went from 580 to 840. So that was a good play right there. And I took puts again at 1035, which is probably right here. Yeah, you can see right here. It made new lower day right there. They were trying to make new lower day, and it got bought, and it got popped up. It made through VWAP a little bit, a lot. Then it flushed through. When it quickly popped up and got rejected quickly, I'm usually looking at either flushed through lower day, because usually what happens is when the market, like if it's going to the downside, if it's dropping, then all of a sudden it gets bought back, has a big green candle, then quickly gets flushed or quickly loses it. Usually that's a strong indication that it's going to end up making more lows. So I do like watching those. So I got puts right here underneath the 447 area. I grabbed the 44.75 puts at 750, and they went from 750 to 820. Didn't get much of a dollar. I think I might have. Yeah, no, I think I held through here. I think I got it here, went against me, and it came back down, and that's when I went to 820 right there. So then I bought calls at 213, which is probably right here. No, 213. I don't know why I didn't buy calls right there. I might have bought calls in the challenge account. Remember, I don't cover the challenge account in recaps, because it just it would take, these videos would be 3 hours long, and I don't want to do 3 hour long videos. No, I'm kind of like exaggerating. I mean, it'd probably be like an hour and a half, and I really don't want to do an hour and a half video. My voice can barely handle the 30 to 40 minute videos I do on this, because I don't really talk that much anyway. So, but I didn't take that. I think I did with the challenge. So when you can look at the chart and say, okay, this is where I should have bought, this is where I think I bought. If you can look at that, if I can point to the thing where it lines up with my trades, like, yeah, I did a good trade, because I can tell where I did. And see, I picked it out right here. It's where I trade. So that means I made a good decision. I kind of look at that from the point of view that if I can look at the chart and go back and look at my trades, review the trades for the week, that if I could pinpoint where I took them, that I made good decisions. And when I'm left looking at it like, why did I do that? And that this is like, okay, maybe I didn't make the best decision. Maybe I don't know what I was thinking. So it wasn't there. I took it. It was at 213 right here, maybe. Yeah, right there. This is where I took it right here. Higher day, well, no, not higher day, but 448.15, rejected, came back up a little bit, rejected a little more, failed to push through, and I bought it. I think I bought it. I got it at 5. I sold it at 5. Okay, so I think I got it right here at the 448, 45, 50-ish area, and it didn't. It dropped a little bit. Well, it popped a tiny bit, dropped, and it popped, it dropped, it popped, and I just got out even. I don't know, the way it was chugging at 448.50, kind of didn't like it. I didn't like the way it was acting, so I just took it, got out at even. So if you can get out even and you're not taking a loss, to me that is a win, because you're not losing anything. You're breaking out even. Yeah, you lose what, a couple, maybe $1 or $2 in fees, but who cares about that? To me, fees are just like, it's just a way of doing business. And if you own any business, you're gonna have expenses, and fees, broker fees is exactly that. Is expenses in your business. So you trade at home, you work at home, you have no overhead except for what the everyday bills you already pay. If you weren't trading, you'd be paying them anyway. So to me, the people that use free brokers, I just don't. You get what you pay for, plain and simple. I don't mind paying fees. It's just a way of doing business. I mean, I've been self-employed since I've been 18, and I ran a restaurant for 15 plus years. So I'm used to the business aspect of dealing with expenses. So that's just the way of life. That's the way life is, and you just got to deal with it. So you get what you pay for in life. And to me, Thinkorswim, active trader, when it comes to options, scalping is like second to none. So E-Trade's good. I'll use it as backup, but I primarily use it for retirement accounts and swinging low floats or swinging long-term plays. I don't like to scalp with Thinkorswim, but I do Thinkorswim with E-Trade. So just throwing that out there. Now, I grabbed calls at 323. So yeah, I took the 44.85 calls at $5, got out at $5, sat on it. Then when it failed to break right here, it bounced off the 20 EMA. I grabbed it right here. I grabbed it when it broke to 448.50. I did grab it there. I grabbed the 44.85 calls at $4, and then went from $4 to $5.50. So I caught it here perfectly. The chop, these are impossible to time. When you get in scenarios like this, you buy it here, you get chopped to that. Even if you held it to here, I barely would have gotten out because I had the 44.85 calls right here. So luckily, yeah, I would have, if I held it, I would have been able to get out with profit. But I cut it here. I wasn't sure what was happening, but when I saw that it bounced off this blue line, which is the 20 EMA, and came back up to higher day, I took the chance and said, okay, maybe it's going to break going into the last half an hour of the day, that we were going to maybe break out right here and have a little pop. And not much of a pop, but it did break out, so it did work out. So these choppy conditions I hate because they're impossible to time. You don't know when it's going to pop. I mean, this thing could have just chopped, and it did actually. I mean, it rejected higher day and came back down. If you didn't sell it and take that dollar plus, you would have definitely taken a loss. And that's another thing I keep telling everybody in the room. Everybody wants a home run. Everybody wants to make the $1 million overnight. You're not going to do it. So get that out of your head, because that's just not the way it's going to work. Take the base hits. Take the $1 to $2 trades, and take base hits. They add up very, very quickly, and so that's what I strive on. Me, I like taking the $1 or $2 trades, and getting out, because I like to hit it and quit it. Because if you sit there and you take a trade and you hold it for longer, trying to get that home run, which you won't get, you'll get it maybe 1 out of 20 trades if you're lucky, and you'll lose more than you'll gain just trying to get that home run, even though it may look like that you're gonna make it huge and make a big play, but you will lose more than gaining trying to get it. So stick to base hits. It will add up quickly, and like I said, hitting and quitting. I like that mentality because if you try to hold to squeeze out a couple extra dollars more out of SPX, anything can happen. You know, news can drop. Something can happen. News can drop on Microsoft. News can drop on Apple, which will drag down the market, or Amazon. Anything can happen at any point in time, and then you end up having a good $1 to $2 play, a base hit that just turned into a total loss. So take your base hits, hit it and quit it. So that's why I don't like staying in trades too long, because anything can happen. So I know I've rambled a lot already just on the first one. I'm try not to ramble, but I don't know. I'm kind of like spaced out a little bit right now. Let's see. Tuesday the 12th, Trade Ideas Room. SPY puts under 446.50, which is probably right here. No, I didn't take it right there. I didn't say that. Okay, what did I put there? Was it down here? Oh, it was Friday. It was Monday's lower day. I had nothing really here to go on pre-market because it was dropping already, and I have nothing to really go on. I look at the previous days, and if I don't see anything on the previous day, I'll go to the hourly and look at the hourly, see where it's at on the hourly. So, but I was going on previous day's low, which was 446.50. Well, I said 445. Yeah, no, 446. Looking at the wrong day. Yeah, 446.50. So yeah, that's what I did right there. So calls, I saw calls right here. Well, I said puts, but we had this huge green candle right here. I was looking at the short side, but got a green candle right here right before it opened. Then when it opened, you get this massive green candle. So it's like, okay, I'll take the chance. If it gets over higher day, I will take calls. When I broke higher day, I grabbed the 44.85 calls at 550, and they went from 556, that 50 cent right there. And if I didn't take the 50 cents, I would have taken a loss. So I'm glad I did that. Didn't like the way this was going. It was chopping inside after inside candles. Was there news this day? It looks like news. That 10 o'clock? No, it's after 10. I don't know. But yeah, inside candles. It's chopping a little bit. But because it chopped like this for a little while, I took puts under. I mean, you could have taken them under the body or under the wick, because the body and the wick is really not that far apart. I mean, you got the wick right here. It definitely wouldn't have taken them off the bodies of those. I would have taken it off the bodies of these, but I'm not sure if I took it off the bodies of these or if I took it off the low. Either way, they would have been fine. The only time I don't like going off the wick is that, like, as if there's a giant wick like right here. You see how that's like 448.20. I mean, that's 30 cents. It's not that bad, but that's still a pretty big wick right there. I would have gone, if I was looking at the upside, I would have used the 448.25. This air 22. Well, I round up 5 cents. So during the day, I round up to the nearest 5 cents. I don't go 448.22. I'm just kind of stupid. But yeah, the wick is too much, so I wouldn't have used the wick. I would have used the actual body of the candle. But right here, because the wick is just so tiny, you could have gone off the body or the wick. So when it broke below 447, I think I'll say 10, that I took the 44.70 puts at 550, and they went from 550 to $9. Nice little play right there. Then I didn't trade all day. I think I had something going on this day. I don't know. See, I didn't take. I think I took calls right here in the challenge. I'm not sure. So I took calls. No, I took puts at 221. Did I take it up here? No, 221 right here. No, down here. 221. I took the FU candle. Okay, that's what I did. I don't know why I didn't do this. I think that I might have. 12. What day was the 12th? And that's Tuesday. My wife had a doctor's appointment on the 13th. They've been on Wednesdays for some reason. But anyways, yeah, I don't know what I was doing here. But anyways, FU candle right here. The FU candle setups have been like money. They're probably one of the most accurate plays, the strategies that I use. But you know, I used to have strategies that were like even higher percentages accuracy than the FU setups were, like the EMA bounces and rejections. But they don't work as well now. But I do look at it once in a while. But yeah, we have all these monster red candles right here. And that might have been what I was doing because I missed this. I think this might have been a news event. Because I missed that candle, I didn't want to grab it. I should have, though. I think I remember that I wanted to grab it underneath the 447.10 area, and I didn't. It probably kind of felt like I was chasing, so I think I just waited. And so I waited for an FU setup. I finally got one right here, which is, if you don't know what it is, it's when you get a long, large candles, in this case, red candles, and I wait for a green candle. Once the green candle forms, then I will take puts at new lower day underneath the FU setup, which would have been underneath. Well, I mean, you could go underneath this, but the problem is that the body is the doji candle. It's very, very tiny, so even a small little fluctuation would have got you in, and it could have ripped. So once it got underneath 446.60, that's where I took the 44.75 puts at 660, and they went for 660 to 790. So I got a little bit of a nice play. So maybe I did grab it up here. If I went from 660 to 790, yeah, I could have gone that far right there, I think. Maybe if I grabbed it a little up here. Sometimes, no, not sometimes. A lot of the times, I grab plays before they break. I don't like to grab them right when they break. Like if you grabbed like right here, like high a day, if you like say high a day is 447.65. Oh, we know high a day is up here, but I'm talking about like over the body of these candles right here. If it gets over 447.65 and you get it at 447.66 or 67 or just a little over it, you would have been chasing this candle. This is what a breakout candle usually looks like when you have some conviction behind it. Versus if say you're going to buy it at 447.65, if you bought it a little earlier, like 447.60, right before it breaks, you would have gotten a good entry, and you wouldn't be buying the implied volatility when this pops, because when this pops, not only the price go up and volatility goes up too. So let's say, well, we got it. Well, we didn't buy this, but let's just say that we bought it right here at $6, and if you waited for it to break out, you would have probably had to buy it up here, which probably would have been a no play, because you would have been chasing it, and it probably would have already been $9 right here. So I know it's risky buying in anticipation of a breakout. That is risky, but to me, I think it's worth it. So I like to get it right before it breaks out, like a few pennies before it breaks out, and catch it before volatility picks up. And that way you're paying $6 versus, $8, $9, maybe even $10, because when volatility picks up, SPX prices are gonna like rip big time, and you don't want to chase something like that. So that's why I always buy in anticipation of breakouts. So to me, that's the way I do things. I know some people don't like to do that, but hey, trading, whatever works for you works for you. There's no wrong way. Just find what works for you and just stick with it. Don't try to trade everything. Don't try to trade every strategy. Pick one or two strategies that you like and just trade those every day, and that's it. And that's all you need to do. And there's almost an FU setup every single day. I mean, you could just sit there and just wait for an FU setup and take it, and then you're done for the day. I mean, you could do that. You can do very well with that. I think that the success rate on the FU candle setup is probably like 95%. I haven't really sat down and calculated, but they rarely miss. Rarely. And I said that I don't like doing long videos, and this one's going to be a very long one. I can tell I'm rambling a lot, so I apologize for rambling. So that was the last play of the day. I probably should have taken it here. There's so many trades I missed. I don't know why I missed them. I'm not going to dwell on it, whatever. Was this the day, the 12th? Where were we on VIX? VIX was kind of low. I mean, yeah, VIX was at 14. But yeah, VIX was, I think, right here. VIX, yeah, I think that the 13th was the day. 13th on is when VIX was very, very low and put the car ratio was very, very high. So, but anyway, so yeah, that is the 12th. 13th will go on. 13th. Let's see, trade ideas room on the 13th. SPY puts under 445.50. Let's see. 445.50. Down here is 445. I rounded up to get the 40. Yeah, right here. No, I didn't. I could have just said 445. Why did it say 445.50? I don't know. I did that for some reason. Did I go off the previous day's low? I might have. I don't know why I did that. I'm not quite sure, but it's possible. I called it at 9. Yeah, 9:10 was up here. So yeah, I called it off this low right here and just rounded down. So that's what I did. Yeah, when I traded as a room, I called it up here. SPY was up here, and that's when I used this area right down here, which worked out perfect, the 445.50, because that's where it bounced right here, and it bounced a little bit here. Then it was resistance here, and then it bounced off it right here. So that was a good level to go off from. First candle, 10-minute candle, was a strong green candle. Didn't break high a day, didn't break low a day. I took calls at 9:59. I see kind of why I didn't. I grabbed it right here. I grabbed the 44.75 calls at 7:30. Get a strong green candle right here. You get this doji candle right here. And then it looked like it was going to pop. I probably should have waited, because the first 30 minutes is where you get a lot of, it either rips, it either has a strong move or it chops. And it started to come out choppy. I probably should have waited, but I didn't. I bought it right here because it opened here, because you can see the candle. Let me blow it up a little more. You can see the candle where it opened here and it dropped. Then when it dropped, it came back up. It bounced off from 20 EMA and VWAP and came back up. And it came back up here over 447. So when it got over 447, I grabbed calls, thinking, okay, we're going to rip, because it was starting to drop and it got quickly bought. So I was like, okay, maybe we're going to break out. So I could see why I did that. I probably grabbed it too prematurely. I probably should have waited for it to get up here. But knowing me, I was probably impatient, probably wanted to get a good entry, and it ended up costing me. So I got them at 7:30 and I dumped them at 3 because it dropped right here. So then I grabbed calls at 10:40, which is right here. It's FU setup right here. You can see this perfect FU setup right here. Strong green candles. There's the red candle. That's the FU right there. I know it could be named a dozen things, but for me, I just like calling it the FU candle. This is my little thing. And but I bought it here in the FU candle at 447. When it broke over 447, I grabbed the 44.75 calls at 620. It started to drop a little bit, then it popped, and they went from $6.20 to $8. So it ended up being a good play, even if I waited and played the FU setup. I would have bought it over. I mean, yeah, I could have bought it over these bodies of these candles over here, but the way the days bend, I probably would have been safer to buy it over the top of the wick, because it's really not that much. It's only 12 cents. And but it does look good right here. But remember, when you're in real time, you can't look back and say, "Oh, I should have done it here." But it just, in real time, you can make quick decisions. And the way I got trapped here and I took a loss, I probably if I mean, I took it right here in the FU candle. I already explained why I took it right there, but I'm just using the FU scenario setup to explain that. If I was taking the FU setup, I would have waited and probably would have waited for over the top of this candle to take it, which would have been 447.10. And then I would have taken calls and that would have panned out. But yeah, this is an FU setup. I can point them out just about everywhere. This is the perfect one. This one and this one are perfect because you want to see large directional candles. In this case, large red candles with a green FU. And then in this case, you have the large green candles with the red FU. I can just point them out left and right. And it works the best when you have this kind of a setup. So just pointing out that this video is going to be so long. Jesus. Then I took calls over at 12:22, which is right here. No. Right here. 12:22. Okay, I see why I took it here. Broke high a day, rejected, broke out, rejected, and got dropped hard right here. I didn't take puts here. I probably should have, but I didn't because the 13th. Is this the 13th right here? Yep. I should have taken puts, but I didn't. I didn't take puts for some reason. I was just looking at the call side. I think because the put to call ratio was too high. I wasn't quite sure. When you have the put to call ratio high and VIX very low, it's kind of high. It's kind of a coin flip. You don't know which side's going to happen. Sometimes they both can happen. They could get it to pop just a little bit to get everybody stopped out of puts. Then they could end up slamming it. And then VIX could pop. So I mean, it could definitely happen like that. And so yeah, when it dropped here, got bought up at VWAP and 20 EMA. Then you had a doji here, a hammer here, another doji, and a hammerish right here. So when it got over the body of this, the wick, and the wick, so I liked it over 447.30. So I grabbed the 44.75 calls at 650, and they went from 650 to 710. Now the reason I bought it here versus up here was because it's been so choppy. It's been so choppy, and I've been doing this a lot lately. When it's choppy at higher day, SPY loves to do this. It will get to higher day, trap you, then drop, trap you, then drop, trap you, then drop. So to me, the best way to play things like this, scenarios like this, is if it pulls back and you get some inside candles right here that are not at higher day but back a little bit, you can go off those levels, and that's exactly what I did. So by buying it here, I'm actually able to get a move, and I'm taking it before we get to the area where it rejects because I'm anticipating a rejection. Now, when I play with breakout candles, I'm usually playing with the mindset that the breakout could be a fake out. And if you play, not scared, but if you play with the idea that anything can happen, and this scenario could possibly happen, you end up doing better. So when you start playing breakout trades, trading the breakouts, and you start taking them at that 50 cents to $1 or $2, you anticipate that something may break out, be a fake out, and you do pretty good. But if you buy the breakout and you expect a $5 move, that comes back to the home run thing, that you're going to end up taking a loss. Because if you did that here, you're looking for a home run off a breakout, you would have failed. I mean, you would have lost like 5-6 trades right there. Versus if you know it's acting kind of choppy and you're not sure if it's going to break out or not, this scenario was the perfect scenario right here because you had all these inside candles. So yeah, that's why I took it there. Then I took calls again at 12:55, which was right here. And again, I did the same thing. I went off these two bodies right here. I remember this play. I'm not buying up here. I'm buying right here. I'm buying right at the 447, we'll round up, say 40 area is where I bought the 44.75 calls at 580, and they went from 580 to 680. That was a dollar move, and that is exactly what happened. It made the dollar plus move, and it rejected this area, this 447.50. It's just been like a huge wall that every time it gets to, it gets slapped. So another area I grabbed it. So this was a perfect play. This was a perfect play. And I didn't want to keep playing this. And just, I mean, I could have scalped the crap out of this, but I didn't. To me, I felt like that because I got 2 good plays off and it keeps rejecting high a day. At some point, it's going to either break out or it's going to get slammed. Basically, my time is too extended. I don't want to overstay my welcome, so I'm just going to stay out of it. And glad I did, because it ended up dropping right here. So I didn't take the drop. This 13th, what day was the 13th? One of these days. 13th was Wednesday. My wife had a doctor's appointment in the afternoon, so that's why I didn't trade this. But not quite at FU setup right there, but you get some red candles, a green candle, then you could have taken it below VWAP, and that would have been a nice play. But it is what it is. So it was choppy. It was choppy. Then when I left early and the wife had an appointment, it decided to make its move. But you don't know. When it's chopping like this, you don't know how long it's going to chop. It could chop for half an hour. It could chop the entire afternoon, the entire day. To me, it's just like watching paint dry. And to me, I just took a few good plays, and I've seen enough. So the 14th, let's see. Let's see, the 14th trade ideas room. And the 14th is SPY puts under 448. Gotta blow this up so I can blow it out. Zoom out, not blow it out. 448, which is right here, this low. Just 414. September 14th. This is when I posted on Twitter saying the 14th, where VIX was very, very low. So 14th is right here. So VIX is at 13. This was the day that I was scratching my head. Okay, I thought it was this day, but it's this day. Well, even this day, VIX was still low. And it was at 13, almost 1350. And the put to call ratio wasn't that low, I don't think, at that point in time. I think it was like I'm not quite sure. I'd have to look. It might have been just at 1. But this day, this is the day that was confusing, because at this particular time, put the call ratio was at 1.14, because I posted it on Twitter, and that was at a yearly high. I think the last time it was this high was like at March. So did I comment on that? No, I didn't comment on when the last time it was high like this. But yeah, it's put to call ratio was at a definitely one of the yearly highs, or close to the yearly high, and the VIX was down at yearly low. So to me, that was very, very head scratching, and I didn't know what to do. And SPY is going up, so I had a kind of a rough day trading, because I wasn't sure. I mean, I did good. I didn't lose any trades, but I wasn't quite sure how to play it. Or sometimes when you have to use the think out of the box mentality, that sometimes it can hurt you more than it can help you. But most of the time it will help you. But in situations like this, sometimes overthinking can get in your head. So I took puts. First 10-minute candle was red. I wasn't quite sure if it was going to pop or drop. So I took the 44.85 puts at $8, and they went from $8 to $8.50 in this drop right here. So you had the first 10-minute candle that formed, took puts at new lower day, worked out, then it quickly got bought up. So if you didn't take your $1.50, you would have been taking a loss. So I took calls at 10.40, which was probably right here. Yeah, right here. And as you can see, it dropped down. This is not an FU setup because it's kind of chopping. It dropped down, made new lower day, and it quickly came back up. When it came back up to 449, I grabbed calls. I grabbed the 44.95 calls at $5, and then went from $5 to 10.40. So that was a 100+ move right there. Definitely happy about that. I grabbed it with not even really. I mean, there's been times where VIX will get very low, like say at 13, and VIX will just stay and chop and go sideways, and SPY will take off. You got to be careful with that with VIX. VIX can do that. Just because it's sitting at 13 doesn't mean you should jump into puts right away. You got to wait for some weakness, because VIX can sit there and chop at $13 and go sideways for hours. And while VIX is going nowhere, sitting sideways, SPY could take off $2 or $3. And if you bought puts, say at 449 going off VIX, it's already up here almost up to 451. So you would have lost because of VIX. But VIX going sideways and SPY taking off, it's not uncommon. I've seen it many times, and it will happen. So yeah, I just took the chance, took calls. The chart said to me that it was going to pop, and then I took it. So that's why I took the calls right there. I took calls again at 148, which is right 148 right here. No, I didn't take calls. I took puts. Stupid me. Took puts right here, and I see exactly why I did that. Let's see what the time is on this. 140. I gotta bring this down to 10 minutes. Bring this down to 10 minutes. Let's bring this down. 140, which is right here. So VIX was VIX went under 13. VIX went under 13. Right up here. And it started to chop. You got chop, 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 chop. And when it broke below all of these candles, right underneath the 450.30 area, that's where I grabbed the puts. I took the chance. VIX being under 13, it chopping, starting to show a little weakness. So I took the chance. I got puts. I grabbed the 45.10 puts at $7, and then went from $7 to $9.10. But it got bought at the 20 EMA and took off. Kind of surprising that it did that, but it is what it is. So I do remember, I think it took VIX calls in the long term right down here. Yeah, I think I did. If I look at the did I take those? Took it on the 14th. Yeah, that's the day I took it. I took calls. I took the 13 calls. God, if I still had them, they would have been paying really well. I sold them the next day, I think. Yeah, I sold them on the 15th. So trade ideas room on the 15th. Let's see. I didn't post my plays on the 15th. I don't know why I didn't do that. I didn't post my plays on the 15th. Well, let's look at it. I don't know what I sold them at or what I did. I'll just go look at the thing and see what showed where I took them. Okay, I took 446.50 at 11:15. So on the 15th. I don't know why I didn't post it on the 15th. Oh no, okay, I did post it. Sorry. Because it says right here, I posted the 15th plate on the 16th, and I see it. I finished yesterday, 3 wins and 1 loss. Okay, so the 15th. I'm sorry, I'm so disoriented today. SPY puts on the 447.50, which was 447.50. Why did I pick it way down here? I picked it way down here. Why? There's a reason I picked it down there. Previous day's low. I just rounded down. Okay, that's what I did. First 10-minute candle, red. Next 10-minute candle was red. I didn't take it. Why didn't I not take that? I didn't take it till 11:15. What was I doing? 11:15. I missed this whole thing. Why did I do that? I don't know why. 11:15. Took puts right here. $11.15. I think I grabbed them underneath the body of these candles right here. The body of this one, body of this one, and body of this one. Because I got it the 44.60 puts at 690, and then they went from 690 to 750. There's a little bit of a wick there, so If I didn't take the 50 cents right there, I probably would have taken a loss. I think, oh, okay, I know what I did. I was taking an FU setup because you get these big red candles right here. You get the FU candle right here. And I decided to take it off the bodies of these candles because they all lined up, which ended up getting a small win over it, but it did not pan out. Now, if I waited for the wick of this candle, I wouldn't. The FU setup wasn't really legit because the candle was really not that. I just jumped in it prematurely. So, and that's another thing I want to mention about the FU setup. The FU setup is usually only good the first time. If you want the highest success rate of an FU setup, you take it on the first one. You take it on the second one, the success rate is like half. So you go from like 95% to maybe 60% that it will work out. So just once it happens once, I know you get tempted when you see it a second time. I just don't think it's worth it. So I played calls at 11:41, which is right here. It did work out. I could grab the 44.70 calls at 6:20, and they went from 6:20 to 7:30. So I got a dollar plus move right there. Because it was an FU failed setup, I mean, yeah, it took it. I got a win out of it, not much. Once it broke, so you get the candle, the strong green candle here. You get this red candle right here. So when it got over the body of this candle and this candle, I took calls, assuming that we were going to get a little bit of a pop, maybe a bit of a V recovery to maybe VWAP or 20 EMA. But they went from 6:20 to 7:30. So I got a dollar plus move right there. Another reason you got to take your base hits. You don't know what it's going to do. SPY has been so confusing because when you see weeks ago or even still to this last week, you get moves like this and SPY will V rally all the way back to higher day. You don't know if this is going to be a bear flag, or you don't know if this is going to be a massive V rally. You don't know when you're in real time. And when you look at after the fact, it's easy to see everything after the fact. You're not looking at everything in real time. So when you see it after the fact and say, okay, it's a bear flag, and I did take puts here, didn't I? No, I didn't. I don't know why I didn't. But anyways, you don't know if it's a V rally or a bear flag. So I was anticipating maybe it's going to be a V rally. That we're going to get a little bit of a short squeeze or something before going down lower, a little bit of a RSI relief, but it popped a little bit. You definitely got the play there, but if you were waiting for a home run, you would have got took a loss on that. So in SPY, especially, the one thing SPY loves to do is it loves to play in small channels. It'll break out in small plays, break out, small play, break out, small play, or it's very, very choppy. So it conditions you to play the small 50 cents to $1 to $2 plays, and you get conditioned playing those. Then after a day or two of it doing that, and that's when the big monster moves usually happen, but you just don't know. You get so used to in the zone of playing that way that you assume that it's going to keep being that way until it's not. And sometimes SPY just likes to take off, have a huge rage or a huge dump from no news whatsoever and just catch everybody off guard. So yeah, I didn't take that there. I probably should have, but it is what it is. I think next thing I took puts at 209, which is down here, right here. I got these massive candles right here. FU setup didn't work out because the next candle was green. It came back down. So when it came back down below the 447.45 area, the body of these candles, I took it with anticipation. It was probably going to retest lower day, and if it didn't, it could have been a fake out. So that's why I grabbed, instead of, well, I mean, if I grabbed it down here, it wouldn't have panned out. I wouldn't even been in it, but I grabbed it off the bodies of this, anticipating that it might retest lower day, or possibly even break down more for possibly a fake out. But I did take it right there. I took it to 44.50 puts at 650, and they went from 650 to 820. So you get a little bit of a move. So I mean, like I said, that's $1.70 move right there. You don't want to miss that. I mean, if you're leaving $1.70 on the table. I mean, you're playing 10 contracts. It's $1.70, $1,700. Most people don't make $1,700 in a day. Not the average person. So, gotta stay humble, because you see all these idiots on Twitter posting their massive gains, but what they're probably doing is they're photoshopping everything, and they're posting their chart after the fact, and then they're showing where they entered and where they exited after it's all said and done, and just saying, oh, I bought it here and I bought it there, and they have no proof whatsoever, and they're just it's all photoshopped and all garbage, and they're just trying to sell you a lie. So that's why I always keep it real. Take the base hits, keep it simple, and don't watch all these people that post these huge gains, because 90% of them, 95% of them are photoshopping and they're fakes. So don't pay attention to those idiots. In fact, just stop watching them. If you see people like that, just block them, because when you see people post things like that, it gives you FOMO, it gives you a false sense of hope, and then you start doing and trading recklessly and trading kind of stupid, and that's when you make some massive mistakes, and that's how you lose your accounts. People just have unrealistic expectations. The average person does not make $1,700 a day unless you're a lawyer or you're in a high skilled trade job. But if you're working a construction job, you're not making $17 an hour. If you're working as a waitress, or if you're working at the post office people make pretty good money, but they're still not making $1,700 a day. But yeah, just always stay humble. And think about the realistic expectations that the normal people make and versus what you do. So that's how you stay humble, and that's how you end up getting better. So the last play of the day, I took a loss, and I see why. Did I take it right here? 316? No, I took it right here. Yeah, I took calls right here end of day, thinking we were going to pop. Obviously, we got it right here. It started to pop up here. Well, it failed to break the lower day. It got bought. So it came up here, rejected. Then it pulled down. It didn't made a higher low, because you got the low here, a higher low. Then it's another higher low, and it came back up here. So I was thinking, okay, maybe this thing's going to pop. So I grabbed the 44.55 calls at 3:30, and it didn't pop. It dropped a little bit. Then it popped a little bit. Then it got slapped, and it ended up being a loss. So I took a chance that it was going to pop end of day, and it just didn't. So it is what it is. So is it the 16th? No, 15th. Now the 18th, which is Monday the 18th, SPY puts under 442, which is right. Let's see what the previous day was. Previous day's low. Yeah, it wasn't that previous day's low. Okay, so it was this low right here I used, and I just averaged down to 442. So first 10-minute candle was red, was green, kind of a doji candle. I was kind of looking at the put side anyways. I mean, and I know sometimes I call puts in the morning, and then I'll end up taking calls, and I usually end up doing that based off from if I said puts right here 442, but yeah, if it gets over here, it breaks this 444 area. And in fact, I think I even said that in the room, that if it breaks 444, I would take that too, because this is an area where it's been struggling pre-market, and it breaks out over that, it's going to have a strong move. But because it didn't break over this pre-market area, pre-market high, low rate, yeah, high right here, because it didn't do that on the first 10-minute candle, I wasn't going to take it. But if it did it on the second 10-minute candle, I probably would have taken it, but it didn't. Green candle, it failed. So I looked at the downside, the new lower day, which is underneath the 442.75. I grabbed the 44.40 puts at 690, and they went from 690 to 770. Got a little bit of a play right there, not quite $1, but it did work out. Then it just stayed choppy. Then I took calls at 10.11, which is probably right here. Yeah, I took it right here, and let's see, I took it over the, looks like I took it over the bodies of these candles. Let me blow it up. That one candle's throwing off my chart. There we go. I don't know what happened after hours, but yeah. You get the body here and the body here. You get this massive red candle, ended up being a fake out, got bought up, came over VWAP, and you get this nice little setup right here. You got an inside candle right here, Get another nice green candle that's over VWAP and over the 20 EMA. Then you get the two bodies right here that line up perfectly. So when it gets over the 443.45 or even 443.40, I took the calls. I took the 44.55 calls at 6:30, and they went from 6:37. So that ended up being a nice little play right there. Not a massive play, only what, 70 cents. So if you took the 50 cents to get out, and this is what I'm talking about, conditioning, getting these small moves. Small move, small move. Then you get conditioned to play like that, then it pops on you. But you just don't know when it's going to do that. So you just got to anticipate it. Then I took puts at, let's see, 107, which is right here. Yeah, right here. Get the body of this candle. It broke out to new high day, rejected, came back down. You get a nice little tail candle right here and here. And so I was like, okay, it gets underneath this this area 444.35. I will take it, and I did, knowing that the 20 EMA is right there. And usually when the 20 EMA is close to where it's chopping, it's probably going to end up bouncing. So I grabbed a 444.60 puts right here, and we're at $4, and they went from $4 to $5.10. So it did bounce right off the 20 EMA. So I anticipated it would bounce. I wasn't sure if it would. I just anticipated it would, just in case, because usually when it does that, it chops above VWAP, and VWAP gets 20 EMA that ends up getting pulled to it. So ended up working out. So those puts paid off pretty good right there. Got the $+ move. Can't complain about that. Then I took puts at 313, which is right here. No. 313. Why didn't I take it here? Didn't take it there. 313. Right here. I think I did another premature FE setup right here. You get the long red candle, the green candle right there, inside green candle. So I grabbed it right here once I got underneath the 443.50 under the bodies of these two candles. I probably shouldn't have done that, but it ended up working out. So I grabbed the 44.55 puts at 420, and they went from 420 to 620. So I got a $2 move out of that. So that worked out. It did not break that candle right there. We used to play retracement candles all the time. Back when COVID was a factor in the market, when Trump was president, and even when Biden was too, the first half of Biden, you get these massive candles. And we used to play the retracements, where they would have these massive red candles, and then when they come back up, we would end up buying puts, and it dropped more. We used to play the retracements like crazy. So yeah, good old days. Now the 19th, took two losses. This was the day. This is Tuesday. I struggled with this too. I struggled on Tuesday. Let's see, 19th, SPY puts. This was the day before FOMC. Was the 19th FOMC? No. Why am I missing days? Oh yeah, the 22nd. I didn't post anything in the Trade Ideas channel because I was still in the hospital with the wife. So that's why I don't have anything there. But anyways, let's see. Trade Ideas room on. I know I'm all over the place today. The 19th, 442.50, which was 442.50. What low did I use? There's no low. It's 442.50. Yeah, it was previous day's low. That's what I used. It's already going down. Use previous day's low. 10-minute candle right there is green. Like I was saying in the earlier video, it's dropping. Everyone and their mother's going to jump into puts. They pop it a little bit to get everybody stopped out. It's what happened here. And then it made new low a day. So I grabbed puts at 954, which is right here. I didn't take it here. I didn't take calls. I probably thought about it. I'm not quite sure why I didn't, but I just didn't. So you had actually also the first 10-minute candle is really not that big. 442.40. It's only 60 cents. It's not that big of a candle. So to me, it's kind of like an indecision candle when it's tiny like that. Even if it's solid green, a solid red. When the first 10-minute candle is pretty small, I'm more hesitant about taking continuation plays on it. It's when you just have the stronger moves I'm more excited about. But this, I didn't take it. Luckily, I mean, even if I did, it would have paid off. I mean, but I just didn't. Once it broke the lower day, I grabbed the full 44. The 44.40 puts at $7, and they went from $7 to $13 on that. So that ended up being a really, really good play. Now the next play I took was puts at 11.45. FU setup was perfect right here. Big red candles right there. FU setup right there. Now, I know that usually most of the time the FU setup is a one candle wonder, but if it does do this, I do still consider this an FU setup. If it's got a green candle and a small green candle, then it comes back down and does break the low Adeo, or not low Adeo, but does break the low of the FU setup. So now this is a scenario I would take an FU setup. I would take it off the bodies, and the reason that for that is because you have these big red candles right there. You get a green candle right here, and you get a wick right here. The wick is pretty long right there. I probably wouldn't go by the wick, but because the body of this candle is a little bigger, and that the second green candle was a little higher, and the fact that the wick of the this candle lined up with the bodies of these two candles right here, that would make it a perfect FU setup right there if you took it right at this 441.35 area. So the sun is in my eyes. Okay, yeah, my trading desk is right at a small window, and when I look at the upper part of my monitors, the sun is right there at like this time of day. So anyways, yeah, I know I didn't play this FU setup. I'm just explaining it to you that the FU setup is still valid because this candle is right here. It's green. It's within reach. Now, if it took off, it wouldn't be valid. But because you get a green candle here and you get a small green candle here, and it all lines up right here perfectly, right here, that would have been a phenomenal FU setup to play. I didn't take it. I know some people in the room did. And you don't have to wait for me. If you see a nice FU setup and I miss, I'm not going to catch every play. I'm not going to catch everything. It's just impossible. You know, sometimes you get distracted, or nature calls, or something happens, and you're not going to catch every play. But if you see an FU setup and I'm not calling it, I haven't called it, just take it. If you like it, only if you like it. Don't take it because you feel obligated to. Never feel obligated to do anything. You take trades because you like them. And that was a perfect setup. I don't know if I didn't see it or if I didn't trust it, but that's the first FU setup right there. I should have taken it, just blindly taken it, because they almost always work out. Now, if you waited for the second one, yeah, I get a big red candle, green candle right there. You would have probably caught you with your pants down right here, because it did technically make new low a day, but it was just not much, and just ended up chopping. So remember, like I said earlier in the video, the first setup is the best. Don't take the second one, because your chances of going down substantially. So I know that I wasn't around this part of the day. The wife had a doctor's appointment in the middle of the day, I think. 20th, middle of the day. No, 20th. No, that's not the 20th. It's the 19th. I'm so disoriented today. I'm so sorry. My mind is just all over the place. But yeah, my wife didn't have an appointment, so I didn't take this. After you set up right here, strong green candles right here, a red candle right at VWAP, and if you took calls right here over the 441.35, would have been a nice setup right there. So you have, if you focus on the FU setups only in a day, just only that, you would have gotten two plays right here. One here, one here. Perfect setup, perfect setup. They both worked. Yeah, you get a little bit of an FU setup on a flag, but I wouldn't have touched that. I mean, it's not really. I don't like this kind of a play because if you had the red candle right here, if these two candles were red, then it took off. I don't like seeing the chop. I don't like seeing that. It did flag though. But anyways, I took puts at 3 o'clock. I know these were hypothetical plays right here. I was just pointing out a few setups that if you see them, take them. So you had one right here, had one right here. I know some people in the room took it here. I don't know about here, but anyways, I took puts at 3 o'clock. I don't know why I did that. Oh yeah, I remember taking it right here. I probably shouldn't have done that. I took the 444 puts at 520, and I ended up cutting it at 1. It didn't work out, so I don't know why I did that. Strong green candle right here. I definitely chased it here, but I see why I took it. I probably shouldn't have. I probably should have waited for an FU setup. You get the bodies of these candles and wicks right here, so it gets underneath 442. Take the puts. It definitely looks like a good setup. I probably, if that was an FU setup, I probably would have taken that would have been the setup to take, but I didn't. I took it right here and have taken a loss. So it is what it is. Then it came up here. It came up to I took calls at 347, which is right here. When I got over the 443, I don't know why I did not. How did I go from how did I go 15 cents and I not take it? Because I took the 44.50 calls at 120, and if I got them at 120, not unless I got them closer up here. It's possible I got it up here, but I probably would have made more sense for me to grab it right at the 443 area. So that leaves me scratching my head that if one of two scenarios is, one, if I grabbed it here, why didn't I sell it? Because if I bought it at $1.20 and it was at the money, they probably went to $2 plus. $2, maybe $3 in that small move right there because it's at the money, or possibly even in the money at that point in time. Or two, I grabbed it more up here and it just dumped on me last minute. So yeah, I took 2 losses at the end of the day on Tuesday. Definitely not happy about that. So Wednesday, FOMC. I don't like trading in the morning on FOMC, especially on the days that Powell is speaking, because implied volatility on SPX is too expensive. You'll be paying anywhere from $10 to $15, where you would normally pay $5 to $6. And to me, it's not worth it. It chops. The theta just destroys it, and to me, it's not worth it at all. Even though this particular day, FOMC wasn't really priced that bad. So let's see. The FOMC SPY strangle, SPX strangle, was a 444.35 puts at $5, and I grabbed the 44.65 calls at $5.90. So I mean, to buy contracts on FOMC when Powell's speaking for around $6 is really good, because days when he's normally speaking, I remember I had to buy him at like $8 or $9, and I'm paying a 100-point spread. And the fact that I'm only paying a 30-point spread, that's really good. So I'm definitely pleased about that. So you get a 30-point spread for about $6 versus 100-point spread paying like $9. So that just shows you that people were not expecting a move, or wasn't pricing in a move. So, but FOMC happened. So let's see, the puts, well, we'll go to the calls first. The calls went from 64 calls went from 590 to 710. It popped a little bit because I think I bought it a little early. I think I bought the calls down here because sometimes I will start loading in before I won't usually wait till like the last couple minutes. I'll start loading in like 10 minutes ahead of time, so I have some time to get in, try to get a good price. So yeah, they popped up to 710, but I think I stopped out at like $3 or something like that. I don't remember, but was it $4, $3? I'll have to look. Yeah, I dumped them at $3, but I had such a good move on the put, so they covered greatly. So yeah, if I bought them here, I bought them here. And I could have sold them up there, but I didn't sell them just in case the SPY took off. They didn't. So what ended up happening was I held my calls. Puts, they dumped. And I sold my puts at like right around $10, I believe. So I got 100% move on my puts. So definitely happy about that. But they went from $5 to $12.70. Definitely a nice big play. Then when it started to retrace back up, I did not grab calls. I mean, because obviously I'm still holding them. I'm not sure if they went green or not. I don't think they did. They might have. I'm not 100% sure. I think they possibly could have, or if they didn't go green, they were very close. But I did dump them in this pop because usually the first move's the wrong one. So when it bounced back up, I dumped the calls that I had holding just in case it went lower, and I'm glad I did because that ended up being the play. But I remember calling in the room that because we had this large green candle right here, that if it got over 444, I would take calls again because I think I dumped my calls from the actual strangle right here, right around the 443, right around 443. I think is where I dumped it. Then it popped. I mean, I think they might have gone green or close to green, like I said. But I didn't want to buy it over this right here. I'm kind of glad I didn't. But if it got over 444, I definitely would have reloaded and bought again. But it didn't. And I did buy puts under about 249, which is right here, 249, right here. When it broke below the body of this candle and the body of this candle under 442. When it broke 442, I grabbed the 44.30 puts at 550. And they went from 550 to 780 just in that drop right there. Then it popped back up. So that ended up being a nice play. I mean, I could have gone more. There's the FU setup right there. Right there. Perfect FU setup. Didn't take it. I got to start taking them more, regardless of what I think. If it's oversold or RSI is too low or anything like that. That is the first FU setup right there. Massive red candles right here. Green candle. It breaks below. I would go underneath the wick. I mean, could have gone underneath the body too because the body's pretty big. I just don't like going when the body's tiny. Like if this was the body right here, I wouldn't have done it. Or like maybe the screen candle. If the bodies are small, I don't like taking them under the bodies. But because this body was bigger and the two bodies lined up, I definitely probably would have taken it there at the 440 area. I could have taken the puts right there, but I didn't. I didn't take the FU setup. Maybe I took it in my challenge account. I don't know. I don't remember. I didn't trade that much in the challenge account this week because I had the baby was born and stuff like that, and I had to be in the hospital. So I only traded half a days, Thursday and Friday. So, but yeah, FU setup right there. Didn't take it. Might have been the challenge. I don't know. I'd have to look, but actually I can look. I can look and see if I did take that in the challenge. Which was, what was the date? The 20th. No, I didn't take it. I didn't take it. And plus, also, I once in a while I'll do play in the challenge on FOMC day, but to me, I feel like that if you play a small account on these volatility moves, that you could go against you really fast, and you couldn't get a good stop out, and you could lose quite a bit of your account in these very volatile plays like this. So sometimes I will trade FOMC in the small account. Sometimes I won't. It's very dangerous, and that's probably what I ended up doing. It's probably too dangerous for me to do it, and I didn't want to take any chances. Especially I've been doing pretty well in the challenge, considering how it started. I've been in this challenge for so long, it seems like already, and I'm just like 1,500, 1,700. I don't remember what it's at, but so close from blowing it up so many times. The fact that I've saved it is a miracle. But yeah, I didn't take this FU setup, but perfect FU setup right there. Even this was an FU setup, but like I said, the second time it's too dangerous. It did work out. You could have played it and made some good money, but this I would not have taken at the body. Look how small the body candle is on this one. I would have not taken it. So I know I'm rambling a lot in this video. I'm just kind of pointing out some FU scenarios because these are perfect right here. This was a perfect setup. This one, you could have, but I wouldn't. Chances are going down, but it did. This situation, it actually did work out, but this was the area to grab it. So that was Wednesday, FOMC day. Now, this day, let's see, 22nd. What? 22nd. Oh, okay. This was it took 2 days. This is a 2-day play. I posted the 21st and the 22nd stats the same day because what was going on. So the first play, 9:53 a.m. right here. I took puts. I took the 43.55 puts. Actually, let's get into the trade ideas room before I get ahead of myself. The 21st, I said SPY calls over 446, which was this low for what? 446. I think I meant 436.50. 446. I don't know why. But yeah, I think I goofed. Yeah, I goofed. But it went off this high right here and just rounded up. That's what I ended up doing. Yeah, that's what I did. So it didn't obviously go that way. First 2-minute candle's red, pretty big red candle. Then you get a little green doji right there, indecision candle. So when it broke lower day, I grabbed the 43.55 puts at 820, and they went from 820 to 1040. So got a nice little play right there. Didn't do much, it just chopped all day long. Then I grabbed calls at 112, which was right here. And you see why I grabbed it here. You see the wick, the body, and it tried to make new lower day. It got bought up. It just was buying this 433.50 area. Got bought. And I mean, I could have bought it right here, but the 20 EMA was right there. I didn't like it. I bought it right here. Actually, no. I think I bought it down here. Because, let's see, I got it. The 43.60 calls at 6:30, and they went from 6:30 to 9:20. And if I bought it here, I don't think they would have gone to $9 in that. So I think I actually did grab it right here over the 434 area. So yeah, I think I grabbed it at 434. Come to think of it. I don't think I grabbed it here because there's no way it would have moved almost $3 right there. It could have, but I don't think it did. I think I got it right here, the 434.15 area. Right at the 20 EMA is where I grabbed it. I grabbed the 43.60 calls, like I said, and they went from 6:30 to 9:20. So got that little bit of a move, and then I just took off early because the wife was in the hospital. So I only played half the day, and a little bit of an FU setup right there. Candle's not that big, but definitely a good little play. Right there, red candles, green, made new low. So then on Friday, there's no pre-market trade ideas play because I wasn't it didn't come home till like close to midday. So first play was calls at 11:27, which was right here. Bouncing off the 20 EMA, rejected it, came back down, bounced off the 20 EMA, so rejected the 200, bounced off the 20, and it came back up over the 433.70 area. That's where I grabbed calls. I grabbed the 43.55 calls at 640, and they went from 640 to 840. So you got a $2 move right there. So definitely happy about that. Then I took puts at 120, which is right here. I grabbed it here. I didn't grab it here. For some reason I grabbed it down here. See, my voice is already starting to crack because I've been speaking too much. So yeah, I grabbed the 43.45 puts right here at 750. And they went from 750 to 1830. So that ended up being a good play to 120. So yeah, I grabbed it right here. Did I grab it underneath the body of these candles? I might have done that. That's probably what I did. Get the bodies here. It looks pretty good because the bodies line up with the wicks right here. These wicks right in here. So that's a nice little lineup I like to see, and that's what I went off from. So good little play. PDC is the white line. It bounced off that. A little bit of an FU setup, and it worked out right there. So, so yeah, the last Thursday and Friday only worked. Yeah, I only traded half the day. Yeah, worked half the day. I don't like to miss trading. I just love trading, so I don't like missing it unless I absolutely have to. In this case, I had to. Family comes first. And so yeah, those were the trades for the 2 weeks. This video is going to be super long. I'm sorry about that. Sorry for the rambling. Sorry for the confusion. I'm just overtired, and you can understand why. So I'm actually excited for next week. Hopefully next week will be a very good week. Hopefully it won't be choppy. We'll cover that in the watch list. So that was the 2-week recap, and that's gonna do it. And thanks for watching.